Okay, we're kicking off the next panel, which is Funding the Future, what investors want in verifiable infra and Web3 projects in general. And we have Maciej from Credo Ventures, Viktor from RockawayX, and Hubert from vlayer, who will be speaking more from the founder perspective, and I believe he's an angel investor himself as well. So both sides of the table. Should we start with quick introductions?
Hey guys, I'm Maciej, one of the partners at Credo Ventures. I'm Polish, but the firm is based here in Prague, in Czech Republic. We basically invest in founders based or that originate from Central and Eastern Europe all around the world at early stages. So pre-seed, seed, deploying our fourth fund, $75 million under management. Yeah, that's the story. And proud investors in vlayer.
So my name is Viktor. I'm a bit nostalgic because in this building I bought my first Bitcoin in 2015 because I live just across the street, and I was searching for a co-working center, so it's the closest one, and they told me, yeah, you can, and my desk was just there, this floor just there, and they told me, yeah, of course you can like work from here. It was just paper desks. It was called like paper co-working center. And they told me, yeah, you can of course buy coffee and in your desk and you pay in Bitcoin. I'm like, what? And so then I got my first paper wallet downstairs from the ATM, and bought my first 3 Bitcoins at $300 to be able to pay for like a year of services here. And then and RockawayX, that's what basically gave me the idea of. Then I was like, wow, this is actually money. It's not only like some crazy stuff, which is going up and down. And so then I got involved in this community and then created RockawayX in 2018. Now we have 45 people, 1 billion assets under management on the investment side, 1 billion on our servers, and we run 52 proof-of-stake blockchains here from Prague.
Hello, I'm Hubert. I already introduced myself before. I think key for this panel is that, as Namita mentioned, I'm not a professional investor, but I was very fortunate to meet a lot of venture capitalists along my journey. Before vlayer, I was a co-founder and CEO of Nephon. It is a online fraud prevention engine, which was acquired in 2022 by a payment service provider. And throughout Nephon's journey, but also now with vlayer, we've been relying on support from venture capital investors. So hopefully I will be able to chip in to my much more experienced colleagues.
Okay, amazing. And Maciej, starting with you, what are the sort of key differences that you've observed between Web3 and Web2 investing, given that Credo invests in a mix of both?
So just a disclaimer that we mostly invest in Web2 and opportunistically, allocate capital in the Web3 realm. So I'm also here to learn from the legend himself, Viktor, who is, super curious to hear what he has to say on the Web3 front. But look, so we basically, the core for us is the team, right? Like when we invest at pre-seed seed, there's rarely ever a product. There's rarely ever, an attraction. So you basically need to kind of realize and look the founders deep in the eyes and kind of figure out whether they have the muscle to build a product first. Do they directionally are right about where they're heading? Because even the best founders, if they're kind of directionally wrong, like cannot do magic, right? Like they can hard pivot and like change the direction completely. But obviously, like in the setup of venture investing, where the companies have runway and kind of it inevitably ends at some point. Like, you know, you only have this many kind of iterations that you can do. So definitely in the Web3 world, that the founder element is even more important for us. So like you just need to trust at some point that at a market that's so new, that's so fresh, and you can kind of compare it to, you know, cloud software 30 years ago. You just kind of need to build deep conviction, like deeper conviction, that the founders will create something that users will love, right? And in Web 2, it's just easier. Like, you know, you kind of have a product or an idea for a product. You can pick up a phone and call like 3, 4, 5 either customers or potential customers and be like, hey man, like, you know, that's the product. Would you like to use it if it exists? And the answer you'd like to hear is like, yeah, I would. In Web3, it's more, that's at least my experience, like it's less of a case. Like you just need to kind of trust that the product will kind of shape the market.
Yeah, it's in Web3, I completely underestimated the complexity when I started. So I started within Rockaway Capital, and I was like, okay, I'm going to leverage the Rockaway Capital Web2 analysts, yeah, for Web3 investments. It didn't work. And then I had to basically hire my own team, raise my own fund, because there is no P&L, there is no balance sheet in Web3 companies. You cannot invest using Excel and PowerPoint. You have to do the work to understand. You have to run the nodes, you have to provide liquidity to protocols, you have to run on-chain solvers, you have to touch the iron to be able to have credibility with founders who are extremely technical. Second thing which is different is, yes, founder is important, you know, high integrity, hardworking, never give up, but community is as important. I would not invest into an Eastern European founder who is not deeply ingrained in the community, in the foundation of his ecosystem. Solana, Ethereum, Monad, Mega-ETH needs to be super ingrained in that ecosystem, close with the founders, because that's where initially the traction comes.
To add to that, maybe from the more of a founder perspective, when I entered operationally into Web3, almost 2 years now. But maybe a side note is that I did have an episode in 2016 for a few months. We were working on a few Bitcoin applications and testing some hypotheses. And I got quite discouraged back then because it just seemed to me that being able to reach some scale of usage back in 2016 with the then state of the tooling and infrastructure was much more difficult. So when I transitioned to more conventional problems such as fraud fighting. But when I really 100% focused this time around, I think the biggest observation was that how much noise there is. And Web 2 is much more mature, of course, as a definition. It's just a label, but at the end of the day, the difficulty here for both investors, but also for founders, is creating this systematic filter of telling noise from signal and not being distracted by constant willingness to talk. In Web 2, especially the established segments of Web 2, no one wants to talk to you unless you have something relevant. They've already heard most pitches 100 times, so they are not even going on a call. In Web 3, it's very easy to have that first meeting because people are just nice and they want to chat about what they are building. They are proud about this, which is great on one hand, but if you don't have this very strong filter as a founder, but also as an investor, and as mentioned, you are not willing or able to go to 1, 2, 5 levels below and tell or see for yourself what's really happening, what's valuable and what's not valuable, and produce hypothesis, it can be a trap. Like it's very, we've been observing, and I've been personally observing some examples of quite promising projects that are just floating because they are going after too many things at the same time and they are not able to find their path. And at the end of the day, whether it's Web 3 or Web 2, the objective is the same. Like you need to build something that is convincing to someone who's willing to pay. And that's the strongest voting power you can find, is a customer that is actually opening their wallet and giving you money. They might say they like you, they might follow you on one of our many platforms, but at the end of the day, if you don't see this kind of vote, i.e. recurring money coming your way, this is probably, the job is not yet done. So I would say, and maybe it's just the way I'm built. Some people concentrate well when it's very noisy, but I guess for many of us, it's just, it's an additional difficulty. And when I think about investing, it must be also very difficult because there's so much happening. Things are moving extremely quickly. So building the filters seems like an important thing.
I fully agree. A couple of similar things I learned. So everything happens on Telegram. I see some Web2 VCs not having Telegram account, doesn't work. Everything happens on Telegram. Second, the founders don't want to jump on a call. Like you don't want to go on a call. It's like, you know, you just write everything in Telegram only once you really know you want to potentially invest, only then you jump on a call. So it's easy to filter actually through just Telegram messages. If you jump on a call, you never ask where the founder is based. Like, as soon as I speak with like TradFi investors, they're like, hey, Viktor, where are you calling from? And my background on Zoom is like, I'm in space, you know, and like, I have like astronauts moving in the background. I'm like, yeah, I'm on my way to Mars. Like, you don't ask people. It's like a faux pas. Like, you don't ask people where they're based in crypto. Like, you live on the blockchain. Just a couple of anecdotes here.
And Maciej, Viktor, you mentioned some characteristics that you look for from Web3 projects, such as team, founder market fit, community. What are some other signals or evidence of traction, and how does it evolve based on stage, whether it's pre-seed or seed or Series A?
So because I'm not a native Web3 investor, I can kind of give an anecdote of what I saw in Hubert and Marek when I invested in vlayer. And that helped me build conviction big time. Basically, I knew Hubert from his previous company, Neton, that I was, you know, also an investor in. And Neton was an AI company, right? And in the like late 2022, early 2023, right? No, or late 2023. Yeah, summer 2023. So like, you can put it on the timeline, you know, like the peak of AI frenzy madness. An exited AI founder comes to me and says, "Hey man, I'm gonna build in Web3." And that was just after FTX imploded. You know, kind of the whole scene in flames. And Hubert went like, look, I have an amazing co-founder, Marek, who's been in Web3 forever. He understands the space. He's in the community. He saw 2 or 3 big trends moving. He made money on them, but never built a company in one of those mega trends. How about, like, we just wanna, like, we deeply believe that now is the time to build a company against the narrative. Like, you know, the whole narrative in the VC/tech space was like, you know, it's AI, right? Like, it's so easy to build an AI company and raise money, especially with the credentials of these 2 guys. Like, Marek sold 2 companies, Hubert sold 1. You know, it's like the easiest fundraising ever. And yet they believed in the space and in the problem and in the solution that they have to offer so deeply that they decided to go for it. And it was honestly like, you know, it made me think, all right, so like, if they want to kind of spend the next decade of their, like 2 decades of their lives building in Web3, there needs to be something in it. So Maciej and I like basically had a week-long crunch, and went very deep in the space, as deep as we can, obviously, as generalist investors. But that was the signal, coming back to the question, that made us very excited and that made us kind of consider vlayer very seriously.
I agree, like being long-term in these like 2 decades, every overnight success takes 10 years. Yeah, I would say back to the community. So pre-traction, we are going to call Solana. So for example, if it's project building on Solana, we are going to call key Solana projects. Founders we know, squads, it's the main wallet used by every protocol on Solana. We are going to call Stepan, no, not call, write him on Telegram. And ask him, Stepan, are you hearing about this project? What do you plan to do? And it's validation. Like, 4 out of 5 of founders we write to have to say, yes, I know this guy, it's amazing, I'm planning to integrate. Post-traction, we are just going to see integration. On ZK, we are going to call Risk Zero, our portfolio company, hey, have you heard about them? Are you, willing to work with them? So it's all about the community. And communities are actually small, they are very siloed. Solana core community is like 10 people. We're going to call Toli, Raj, Lukasz from Jito, Jupiter guys, squads, and that's pretty much it, yeah? You are done. So you might think like communities are big, but actually they are like very small, super good friends. And us as investors, we have to be super good friends with them. And that's hard, but that's another topic.
Can you repeat the question, sir?
As an investor, what signals or characteristics do they look out for?
I guess it depends on the stage, as discussed. And we probably try to use, and we are proud about this, some of the good inventions that work well within Web 2 for Web 3 context. And actually, maybe for many of our stakeholders, we seem a little bit weird because of that. So like we look at metrics maybe earlier than it will make a statistically significant reason to, but it's also about making the team sensitive to what we very soon will completely rely on. So developing this kind of muscle memory within the organization is very difficult if you are already there. So as soon as we are seeing first signals that actually the first non-negligible signs of tractions are coming, it's good to already be prepared for more. Some people argue that it might be too much of an investment for something that is not yet there and we should concentrate elsewhere. But we do feel that within the organization, like if we are able to distribute the roles, and with me and Marek, it's very easy because we have almost perfect trust, or like as close as possible trust and a split of responsibilities. So we can just not overlap and concentrate on what needs to be built in the respective areas. But we are searching for signal, like whether signal means conversion from a community member that is an anon and we don't know anything about, what kind of profiling we are able to do, how can we engage with them to learn even one bit of data from them, why did they even land here, obviously filtering the noise, and really double downing on the little lessons. At the very beginning, it's a very unstructured and messy picture, which is frustrating for most people. Solving a puzzle that someone constantly is changing in front of you is an unbearable task, but the pieces are there. It's just about how much grit you have to try to take as much as possible from the picture, and if you're able to filter out a bit of noise with next iteration, you have a better view of where the signal really is. So, and what we are trying to do is obviously convert it into some sort of tangible messages in a way that the investor can understand what we are trying to do and how we are approaching things. But at the end of the day, they need to build conviction and understanding themselves. As mentioned, it gets too complex, and especially for generalist investors, like it's almost impossible to appreciate some of the things. So we can just offer some data and some insight, and at the end of the data, they are building their hypotheses, they are building their narratives, they are trying to, they are better at filtering whatever is relevant for them. But our job is to see clearer picture with every day, every week. And obviously changes with stages. Like right now, we are probably at this very exciting stage where we see actually data, we see usage. It's very unstructured, very messy. But with every week, I feel we know more. And as mentioned, the success is built overnight in 10 years or so. We have a bit of time, and I think that's actually one of the big lessons for me is that I don't believe in building something in 6 months. Like obviously you can build a subset of features, but like to really, you need to be prepared for a longer journey. If you really want to do another company in 2 years and you already know what you want to build, this is probably, it means that it might not be what you should be investing your time today. It will take time.
And Viktor, maybe a question for you. So most Web3 projects, they have some sort of token model, token strategy, and they achieve liquidity a lot faster than Web2 projects. How is that factored into your due diligence, and how do you prevent from over-indexing on that, given that there's a lot of speculation involved in that component?
I would say, in a controversial way, token is the biggest problem of our industry. And whenever a founder is coming to me saying, hey, like TGE is in 3 months, we don't even take the call. So, because then, token brings speculation, and it brings what we discussed, like airdrop hunters, and right now we only look at projects where token is a cherry on the cake, meaning you only launch it when you have millions of dollars of monthly revenue. And then token has to have utility. Thankfully, regulation is changing. So now you can have fees flow through the token. We are now investing into a DeFi protocol called ONRE, O-N-R-E, on-chain reinsurance. The fees will be used to buy back and burn the token from circulation. Now you can do it. Hyperliquid, I mentioned, they are doing $700 million revenue in fees per year. They're using 97% of that revenue to buy back their token from circulation. That's a $650 million of buy pressure per year on a $34 billion market cap. This is great. When I explain this like this to TradFi investors, I have 80 LPs, they understand. They're like, wow, it's as if like Apple was giving away 97% of their revenue, not operating profit, revenue, top line, to buy back Apple shares from circulation, and that's impactful. Yeah, that's massive.
I couldn't agree more. Like a token seems to be as a shortcut, and again, you need to have patience, and like it's just PMF, or however we might not like this term, but like it represents something. Like there needs to be this tangible demand for what you're building, like confirmed, validated, repeatable organization that fulfills this, or decentralized structure that fulfills this. And token is just a very useful instrument to organize the ecosystem later. But very often it's just there is this temptation to just skip all this part and go straight for token because someone is thinking that it's just a quick way of making money. And yeah, immature industries have the tendency that the fraud rates are much higher, and then that's unfortunately what we are seeing. The better outcome is that all the good projects are also being hit by the fact that there are unfortunately teams that are playing this shortcut game, which backfires from time to time and doesn't make our life easier.
And is there a definitive sign of PMF in Web3? In Web2, you have 1 million ARR, obviously product love, but Maciej, Viktor, do you think in Web3 there's some metric which
I would say, look, I think it's even the website. Like you look at the website and you know if the founder found the product market fit or not. Yeah, and I think in crypto, and this is feedback to my industry, we have to, hopefully move very soon from just technology and kind of like fighting with each other on Twitter who is smarter because of this new consensus algorithm or, verifiable layer, and go into just who is my customer, what's the value proposition, why is he using this product, yeah? And in a very friendly way, I looked at vlayer website before coming here. I had to bring 2 of my analysts to be able to understand what vlayer is doing. And we had and even after 15 minutes, I didn't understand it. I was like, guys, this is frustrating. I still don't get it. 2 analysts, and one of them is has silver medal in mathematical Olympics globally. And so it's a great example that, we have to improve user interface and we have to improve the communication in our industry.
Feedback taken. We agree. Actually, updating website is always one of these tasks that internally we already see and name things differently, but the website stayed, and there are other things. But you are perfectly right that this is the business card. However, we don't ask where are you dialing from. Website is still the first page of reference.
So just an anecdote. So yeah, in Web 2, it's kind of easy, right? I mean, you have a total amount of revenues and you have a momentum, right? So how fast you got there. And in Web 3, it's definitely more nuanced. And I even had last week in San Francisco, I met a multi-stage crypto focused investor. And I wanted to learn from him, mate, what are the things you're looking for in a crypto project to lead an A, to invest more in a Series B, because at pre-seed seed it's mostly the founder, the directional kind of the direction of the force, where they're going, and thematically whether the topic is interesting or not, and if the space is crowded or not. But then when the company is actually asking for more money, what are the things you're looking at? And the guy, a tier 1 fund said that he doesn't know. It's basically case by case. You cannot put a cookie cutter kind of template to assessing Web3 projects, because there's so few of those that actually deliver value that you can kind of measure, where you can measure success somehow. And it's probably different in DeFi because there's more data and more kind of metrics. But in protocol kind of Web3 products, I think even a tier 1 investor didn't really know if there's a set of metrics. It's very much about momentum and about the ability to kind of actually build a proposition that sticks, but what does it mean in terms of the numbers? It was unclear, so I didn't learn anything. Just wanted to convey that story.
I don't know who you are talking about, but I can imagine they invested into Eigenlayer at 2 billion valuation, with zero traction, because of 2 things: risk-taking as a narrative, so good direction, and then everybody was talking about Eigenlayer, 2 years ago. And so this is the signal. It's how many people talk about that project. That's what I call community.
And just one last quick question, since a lot of the audience will be hacking tomorrow. What areas, especially within infrastructure, just Web3 or ZK in general, what are you excited about? Maybe you can provide some inspiration to those in the audience that will be hacking.
No infrastructure. No, I would say, because I'm here, so I would say on the infra side, we invested so much money in ZK, so much money. We invested into risk zero, 3% of our fund, large check. We invested into Gevulot, which is a marketplace allowing anyone to generate proofs. I co-founded with my father MayaZK, which is a company which is implementing zero-knowledge proof generation algorithms on FPGAs, because my father is a researcher implementing cryptographic algorithms on FPGA. And there is no demand right now. So it's all about the future. I initially thought ZK would be used for scalability. I don't think so anymore. You know, you basically, we can speak about Ethereum ecosystem for long. You basically have three potential winners, kind of, in addition to Ethereum base layer. It's Arbitrum, Optimism, and ZK Sync. Technically, for me, most interesting is ZK Sync with their elastic chain, but they don't have traction versus Arbitrum and Optimism. People don't care if they settle with optimistic or ZK proof. They don't care. And so scalability, it's probably not where I would focus now. I would focus on privacy. I spoke with JP Morgan, you know, last week in New York. They're like, yes, our chain is private only. Without privacy on public blockchains, we will never use it. Privacy and identity. So probably focus on, you know, where you guys are focusing, which is KYC, identity, how to, you know, leverage zero knowledge proofs to simplify that. And second, I like what Dusan is doing with Evangelist. So, you know, using ZK to kind of go around these costly and expensive APIs from big Web2 companies.
100%, let's build apps. So please do build applications that are using some of the underlying infrastructure and tooling. As mentioned a little bit earlier today, I'm not sure everyone was there. We do, as vlayer, providing or working on one, hopefully to a second app to demonstrate how to, or bring an additional component into this ecosystem. Totally agree that there is probably enough infrastructure. There is not enough real usage of applications that are benefiting from some utility that this infrastructure is giving. One app that we believe is very important is called Vouch. It's using the underlying cryptography that vlayer offers, and it's a private data vault that allows you to store attestations and use them as an authentication token to various platforms. So fully aligned, like feel free to check out getvouch.app as an application with which you can build obviously various cool projects as well, but more than anything useful.
So when we were investing in vlayer, we kind of tried to, because we are not Web3 native, right? We tried to understand what's the universe of applications where zero knowledge proofs as a technology could be useful in either Web2 or on the intersection of Web2 and Web3, because it's like closer to our hearts, obviously. And we've built kind of a thesis for what we are excited about, which is kind of using ZK to make low utility, high sensitivity data private. So basically every company is sitting on terabytes of data that they cannot use anywhere to improve the business, to train the models. Think like, personal details of customers, right? Think Coinbase, right? With, the most recent fraud that cost them like $400 million. Like they cannot use the data about their users, like name, surname, address, how much they own, to improve their business. But it created liability that is kind of existential for the business. So we feel that every data, every bit of data that is low utility but high sensitivity can ultimately be kind of protected using ZK proofs, and that's kind of a thesis we are following and we're kind of excited about.
Great. Okay, I think we're getting ready for lunch, but let's take one or two quick questions from the audience.
A major trend or trends will be leaving crypto, and that idea of investing ideally is different view from the mainstream view.
There are just three use cases of crypto which really make sense. Number one is trading. And yes, some people might call it speculation, but it's actually a massive use case. People just love trading crypto. And in spot and derivatives, people are trading, daily as much as they are trading on NASDAQ. 24/7, instantly. And so trading for us is still a big use case. We are investing less into from this fund, but historically it's the biggest use case. Second is stablecoins, including new innovative yield-generating stablecoins, like, for example, Ethena, which is using basis trade as a way for you to generate 8% on the stablecoins. And the third big use case for us where we are now focused on is yield on-chain. As more and more people, including meme coins traders, will be natively on-chain, will hold digital assets and stablecoins, they will want to generate additional yield. Crypto is great for this. Yeah? So we are now investing into Onri.finance. As I said, it's a reinsurance protocol on-chain. You will be able to generate 40% on USDC, 40. Where else do you get this in TradFi? Yeah? You will ask me about risk. It's a reinsurance risk. You might lose 1%, but still 40% is a big enough buffer, or even 20% for you to, buffer the yield. So an on-chain yield is like, it's very wide. Like it can be, even tokenization. Apollo just tokenized their fund on Solana. What is great about this is now you can use your position in Apollo fund and borrow against it in DeFi. Or you can leverage. So you borrow dollars for it and you reinvest into Apollo. So that's what I'm excited about right now is on-chain yield. Of course, all these three, areas of applications only work if infra is solid. And so on the infra level, we are looking at what's called N1s. So we are now helping to build like a optical network of cables globally so that blockchains can run much faster, not on the internet, because the internet is now too slow. Ping time Prague to Frankfurt is 200 milliseconds. If Solana has 400 millisecond block times, it's just too slow. So we are now helping to build this network of optical cables for blockchains to be, as fast as Visa.
Okay, thank you so much.
Thank you.
Thank you.